Hello fam, how you guys doing? So I recorded a video before this, and I realized that my mic was on mute, so we have to just restart. But I have already done everything, so I'm just going to explain what I've been doing. Okay, so right now we're looking at Nasdaq, and Nasdaq has been on a long-term bullish trend, and most of these trades that you're seeing here, we actually took them live. I posted majority of these trades. In fact, almost all these trades, I posted them on my Instagram, my @YoungJoe. If you aren't following me on Instagram, just go to Instagram @YoungJoe. You're going to follow me. I'm going to post it right here, or you can click the link in the description. It will send you directly to my Instagram so that you don't miss my entry signals when I post them. Okay, either way, let's continue. So Nasdaq has been long term on a bullish trend, but we've been capitalizing on both upwards and downwards trends, taking some losses, taking some profit. As usual, majority are profit. Okay, majority of our trades are profit, but you can see like this loss, this was a loss, profitable trade, loss. These two trades we missed, this didn't trigger, and we missed this trade. We didn't take, so these two trades, these were the last positions that we were supposed to take. We did not take, so I have not been active on Nasdaq since this period of time. Okay, on this trade we were waiting for entry. We actually triggered this entry. The market triggered us right here. This was the candle that triggered us, and then market pushed to the upside, continued push to a stop loss, and then pushed down to our target. We were actually targeting this zone right here because there was a fair value gap right there, but you could see that it pushed downwards up to this area, but our entry right here wasn't triggered. So literally I took this entry. If I recall, I took this entry, but it was a premature entry that I took. In fact, I took it from somewhere around here. I didn't even post why I took it, and it's not on this charts, it's on my other charts. You'll notice in one of my, I think, Pepperstone or something of the sort. But yeah, so overall Nasdaq has been bullish, right? Nasdaq has been very bullish. We missed, now you're going to note that after this bullish trend, the market has now formed some form of consolidation. Okay, this right here is some form of consolidation. So we are trying to see where is the market potentially likely to go. And since the market is bullish, for me during this consolidation, I am mostly going to be looking for bullish entries. Not only am I going to be looking for bullish, I'm not only going to be looking for bullish entries because I think the market is bullish, but here's my main reason why I believe that this market is so let's go to the daily time frame. You're going to see exactly what I'm talking about, why I believe that this market is still bullish. Okay, so we saw this market drop down like this, but so we would call this, mostly we will call this a change of character, some form of change of character, but I wouldn't identify this yet as a change of character because I usually have 2 points of support. Okay, I usually have 2 points of support. When the market breaks both points of support, then I would say that the market has shifted its trend. Now it's time to look for the opposite trend. Okay, so where is usually my 2 points of support or resistance? So in this case, since you are going to the upwards, I'm looking for support where I'm going to be buying. So my 2 key support zones are going to be the nearest higher lows that were created. Okay, the 2 nearest higher lows that were created. So when the first one is broken, when the first higher low is broken, then I would now start looking, will the next higher low be broken or will it act as potential support? So that is what I'm going to be seeking. So to me, in this case, we're going to see that this market pushed upwards, pull back, and continue to the upside, right? So this zone right here, I'm going to mark it out as this is support for me. Okay, this would be support. But what happened? The market broke below support, retraced, giving us a beautiful retracement, another retracement, beautiful retracement, dropped to the downside. But while it dropped to the downside, it did not break this support. Okay, so the market is still bullish. It did not break this support because this area is the one that sent this market to the upside. So this was not broken at any point. But this is liquidity, and this is also a key point for us. This is a key point for us, this right here, this candle right here, because this candle, we saw some form of we saw this area right here. It formed some form of consolidation, and the market pushed to the upside. So this area right here, I'm going to mark it out so that you can see it more clearly. So this area right here, this entire zone right here, this area becomes an area of interest, and you're going to see that market came, pushed to the upside, market came, pushed to the upside from that area. Then it took the lows coming into this area and pushing to the upside. Now we're going to trigger this as an order block. Okay, it triggered this as an order block. Let me show you. This now acted as an order block, but I'm going to explain that later. Let's look at this area right here. Let's look at this area right here. So there was some form of consolidation because we're on the daily time frame. There was a small consolidation that formed around this area before we saw now a break of these highs and a continuation to the upside. We also saw a fair value gap being created right there. So this entire area is a demand zone. Okay, this entire area becomes a demand zone. So what happened? We actually did not participate in any of these areas, so I'm just telling you what I am seeing that happened, right? So the market now came, created this low. Okay, so it created this low, but this would be a lower high, this would be a lower low. Sorry, this would be a lower low because it's lower than the previous low, lower than this previous low. So this would be a lower low. Then we expected that this market would push upwards and come and take this liquidity. But what happened? It created a lower high, telling us that this market will now continue to the downside. We might potentially see it going to the downside. What happened? The market came back to this demand, this area that was now demand right here, okay, at this candle. And the next thing you saw, push to the upside. Again, it failed to take this high, again creating a lower high. So all this becomes liquidity. All this becomes liquidity. What happened? The market fell back down, taking this liquidity that was resting right here, because when the market came into this zone, it created some form of equal lows. You're going to note that this area and this area, we had some form of equal lows. This low and this low, they are almost close, so the equal lows. So that becomes liquidity. The market dropped back down, taking that liquidity, and the next thing we saw was a change of character on the 4-hour time frame. Let's go to the 4-hour time frame now. Okay, so that we see it more clearly. Let's go to the 4-hour time frame. You're going to see that every single thing that I'm talking about is very vivid on the 4-hour time frame, right? So we saw it push to this. We saw it push to this area right here. Beautiful supply. Okay, this area is supply right here, from here to here. Supply, beautiful, push to the downside. We saw it take this liquidity, create a lower high because it's lower than this and it's lower than this. So it created a lower high, and what happened? Dropped down, failed to take this low, and pushed back up, creating now a change of character. So what do we expect? We expect that the market will continue to the upside, take this liquidity, and eventually take this liquidity that is resting right here, and then we see it create new highs. But that did not happen. We saw it push to the upside. We saw it break, retest. I'm going to explain how we usually take our entries from this area right here. So let me just show you what happened. So when we usually see such a movement, we usually plot our Fibonacci tool right there to there, okay, and expect the market to push back down into this blue zone, okay, because this is our optimal trade entry zone. I do not take my entries, our discount area, okay, when we're looking to buy, our discount area begins from 0.5, but I do not take my entries from above 0.5. So this triggered above 0.5. That is not a suitable entry. Okay, that is not a suitable entry, because even if we were to take this entry, let's just say that we take an entry from the zone, our stop loss will have to be right here. Okay, our stop loss will have to be right here, and our target will have to be this nearest liquidity. Okay, this nearest liquidity. Is it even a 1:2? That is not even a 1:2 type of trade. A 1:2 will only be achieved if this other liquidity is taken. But what if this market only takes this liquidity and we see push back to the downside? That would be a failed type of trade. Okay, that wouldn't be an advisable type of trade. That's why I usually wait for my entries to trigger within this zone right here. Okay, this blue zone, that is where I usually look to take most of my entries. But most of the time you're going to note that the market comes into this 0.5 and pushes to the upside. You can take your entry from there, but you will have to use your stop loss be up to this zone. In fact, it will have to be slightly lower than that zone. Okay, so let's just say the market pushed to the upside strongly, taking this liquidity, but failed to come and take this liquidity. Instead, it created a double bottom, broke below the double bottom, because you can see a clear break of this, and the next thing we saw is the market opened on a Monday with a gap and milked all the way down to the downside. Beautiful, into this demand zone. Okay, this demand is the one that sent this market to the upside. So again, it poured all the way down into that demand, reacting beautiful from it. We saw the market come back into this area, and beautiful, the market went to the upside. Okay, the market went to the upside right there. Beautiful type of trade. Then we eventually saw the market come back down into our Fibonacci zone, where we would take our entry, we plot from this low to this high, because this liquidity wasn't taken and the market started milking to the downside, and an advisable entry would be around here, but failed and dropped to the downside, and we did not see this liquidity get taken, but we saw it reacting to this order block right there and then pushed to the downside. So the market came directly into this order block right here. We saw it come into this order block right here and push to the upside. Okay, let me show you where sorry, not order block, it's not order block, this optimal trade entry zone. Okay, because our Fibonacci area was this side to this side, so it fell into this Fibonacci golden zone, and beautiful, we saw the market beautifully now pushing to the upside from this area. Okay, I would advise take an entry from half of this right there, but you can take it from immediately right there, whatever your choice would be. But most of the time, once it taps into 61.8 golden ratio, it usually drops to 78.6. That's usually what happens most of the time. And you're going to notice that this gap, when this gap opened, this gap actually fell directly into 78.6. So it actually fell into 78.6. So obviously we would look for a pattern around there, and then if we were taking this trade, if we were monitoring a trade at that zone, and then obviously put our stop loss right below this, slightly below this, somewhere like there, and then our target would be 1:2. Okay, our target would be a 1:2 type of trade, but I would advise to come and seek this liquidity. Okay, I would advise to come and seek this liquidity, because this high has to be taken, and this high has to be taken, and this high has to be taken. So all this becomes liquidity that is resting right there. So this liquidity that is resting right here, this liquidity here, we saw it come get taken. Okay, the market took it and dropped down. In fact, this trade, this exact trade, we took this trade right here, but on an intraday perspective on Friday. Okay, for those who are trading with me on Friday, I did it on live. You would note that we took this trade on live. We had our first take profit here, which was hit. Okay, if you would note, you know that we took this trade. Then the market started breaking down, took a break even, but we were targeting these highs. In fact, I had put my next target at 22,100. Okay, I'd put it below this. I'd put it at 22,100. So I am still targeting this high. Okay, I'm still targeting this high. Now what am I going to be looking for? Okay, I'm going to be looking for two things. This area right here, because we are seeing the market create a higher high, higher low, higher low right there, right? And then now this is a retracement, so probably it's going to tap into this order block right here. It's going to push into this order block right here, and we could potentially see it push to the upside. Or the second probable event or scenario that could happen is it could decide to make all the way down into this support zone, and we see it push to the upside. So there's two possibilities. So I've set an alert here, and I was planning to actually set an alert right there. Okay, so let me set an alert right there. I hope you have understood why I'm planning to take a buy entry. I hope you have understood why I'm planning to take a buy entry between this point and this point. So I'm going to have two areas. I usually have two areas like this and this. I usually put two areas. I plot two areas that are possible for an entry to get taken. So I would advise that I would look for entries around, okay, I would look for my entries around this area. Okay, put my stop loss obviously somewhere like there. Okay, and I'm going to target this 61.8 golden zone. So why am I going to target that 61.8 golden zone? I am expecting this liquidity to get taken. So right now we have almost 3 liquidity zones. The market took this liquidity, now it's coming to mitigate into an order block. So what do we expect? We expect that now it's going to take liquidity. So where is liquidity resting? We have liquidity resting here, we have liquidity resting here, we have liquidity resting here. So what do I expect? I expect all this liquidity to get taken. Probably the market could settle between this point, okay, at 41%, or this point at 61.8. And most of the time you're going to note that once the market takes these highs, it usually pushes upwards up to 61.8, which is a golden zone. Then we potentially see a reversal. Okay, so once these highs are taken, I believe that we will see it probably settling at 22,300 or at 22,500. Okay, and my bets are very high on 22,500. So 562, 563, that area right there. So we are looking for buys on Nasdaq. But before we take any buys, always ensure that you wait for a confirmation. Maybe we see a pin bar right here. We see a pin bar, and then we go to a lower time frame, like a 15-minute time frame or the 30-minute time frame, and we look for such a structure. So obviously we're going to see maybe a double bottom with a high like this, and when the high gets taken, we wait for a retracement and we enter. Immediately we enter. We don't wait. Once this high is broken, you can even decide. Once the high is broken, you can decide to enter from that break, put your stop loss below the lows, and target the highs. That is usually also another entry model that you can decide to use. Okay, but you need to actually be sure you're seeing a double bottom form or something of the sort. See a structure on a lower time frame. On the higher time frame, see a pattern candle. Okay, what do you call them? Candle patterns. A candle that forms a pattern. Okay, you might expect to see a pin bar, a whatever bullish engulfing, an engulfing candle. Whatever pattern you see, that should be your entry model. So Nasdaq, we're looking for buys. I will come back, and probably I might decide to do a live when we take this trade, but next week I'm busy, so I will not do a live. But yeah, Nasdaq, we're looking for buys. Next will be gold, so I will be dropping a video for gold shortly after this. Okay, thank you for viewing, and if you've not subscribed and you're not part of the community, click the subscribe button, like the video, and share with your friends. Okay, also this video is sponsored by Smart Chats, a premium chatting platform that offers you AI powered signals and also offers you the best strategies and trading education, all with the best mentors in the world. Okay, so click the link in the bio to access your Smart Chats. Go to Smart Chats and take your trades, see how you're going to do your chatting, get your signals from the AI and use them. You can also register, you can also join the SIA community in the Telegram group, and also maybe see the AI, maybe take some AI signals, see how they've been coming in, take some of the entries, and if you like what you're seeing, you can jump in. Okay, so that's what's up. Click the link in the bio. I think it'll be the first link, Smart Chat. Second link will be for our community, our WhatsApp community. Click the link to join our WhatsApp community right there. Last link will be sending you to our broker, our best broker, the best broker that we use, and that is Winso Brokers. Click the link in the bio to register with Winso Brokers. And lastly, click the link that comes at contact me. Click that link, follow me on Instagram. Don't miss any trades that I take, like all these trades that I took right here. Just go to my Instagram, you're going to see majority of these trades I posted them on Instagram. Okay, so go right there, do what you gotta do, and see you in the next video. That's what's up. Let's go.